we'll talk about cutting it close. We're looking at silver, of course. I'm talking about silver, of course. And it's gone about as far as it can possibly go. As it likes to do. It likes to go right to the edge. Right to the extreme. It's never a small dip. It's never a small retrace. It's never a small movement. It always goes right to the absolute, utter, extreme limit of what it can possibly do before putting in maybe a little turnaround. Maybe a big turnaround. Who knows? Again, I was saying the extreme that I really wanted to avoid was to put in a right shoulder, like we just have done here, with the head, equal to the left shoulder spike here. Not on closing, but this spike here. And we did. We came all the way down, spiked out of it, closed higher. And of course it had to do that, couldn't it? It couldn't just put in a flag to the neckline and go. It couldn't just come under this wick. It just couldn't come under this wick. No, it had to come under this one and this one. Did it come under this one? Not quite. But even so, it had to go to the extreme, didn't it? It just had to. I've been trying to buy this fucking thing all the way down, and I hate it. I hate silver with more than ever. With every bone and every fibre and every sinew. And now I'm long from down here at these lows, because when we went under this wick, I said, in line with what I was saying last week, this is the extreme. If it's going to turn around, it has to be here. It's last chance saloon, or else see you at $17 an ounce. And if it does ever go down to those levels again, I don't have a house to mortgage, but I would mortgage it and buy silver then if I did. In any case, we follow through here is essential. We'll look at some other charts, look at some other time frames, and come to our own conclusions. So, you can see that the RSI is back at the same low that it was at the very top of the head on close. We're a little bit higher. We've come down to the extreme of the left shoulder for the right shoulder, wicked it closed higher. We've also hit some big, that's a big quarterly line. Is there anything else there? Quarterly. Thought there might be two lines on top of one. Let's have a look at the quarterly then, see where that's coming from. There, okay. Maximise price. There it is. There it is. When we get over 2440, when? That's go time. 2430, 2440, we get over that, it is go time. It is go, time. The line we're on is the line that links this high, and this high, this low, this high, this body close, this body open, this wick low, this low, the back test here, the close and the body high here, and then boop boop. We're back. We came into it here for the last quarter, we're back here again. So this is an important support. There's the level of the bodies at 2175. And we need to see strong and immediate upward movement, in my opinion. We came down into it, we bought up, we've come back down again. Are we now going to have another effort that launches us into or beyond the 2011 highs over the next couple of quarters? Or the next year, or whatever you want. There we are on the monthly. So there is two. Yeah, I put one in on the monthly as well. The black one. The blue one is the quarterly line. There's the weekly. Now what did look especially bad was this move here. there's your supply, there's your previous high, we went above it, and then the speed, the rapidity of the dump, this look is not good. This look is atrocious. But we're relying again, this support, we're relying on the head, left shoulder, right shoulder, because otherwise we're coming down to here. We're back testing, I think, down here. 1860. And after that, anything under 16, I guess. So there's the daily. And we did have that nice German World War One style stick grenade. The stick grenade candle, I'm going to call that. Never mind its fancy name in your fancy schmancy TA books. That's the look on the 4. There's the extreme of the left shoulder. This is like the mini inverted head and shoulders that formed the head itself on the high time frames. You can see on momentum there's a little bit of a positive divergence. On my ease of movement indicator, more pronounced. On the 4, the 6 also provides a good view. On the 6 you get a good view there. Let's put in our trend line on wicks. And then a tighter one on the closes on the 6 hour. Again, pronounced divergences in a good buying area. Worth the shot. Worth the shot. At such an extreme, in the zone, with divergences, worth the shot. And so I took the shot. So I'm in long silver from, I wish I could say down here. I just realised it was actually, I think when we started closing above this pivot line here, it's like the centre of this mass, I think. So it's not the best entry, but in the bigger picture, if this is our bounce off the quarterly and this is the extreme right shoulder, then it doesn't matter that my entry wasn't. It won't matter. It won't matter. Hopefully that my entry wasn't the best. I didn't get in down here. I don't think I really thought we were going to come down here. I didn't set limits or anything like that when clearly I should have done. I had to get in at market. I was at work on my phone actually. And I think I got in somewhere in this mess, and again my stop would have been just under these lows, and they spacked me out, so that's why I had to get in at market above this pivot line. What's a pain? What's a ball ache? Here we are on the 15. There's our little immediate trend line resistances that we did on the 6. Bit of wiggle room. Not as precise, not completely precise, but hey, wiggle room is king, right? What else? The S&P. I've been shorting the S&P, and if it wasn't for my failed buying attempts in silver, taking money out of my trading account, I would have been up nicely this week on my S&P shorts. So I'm a bit frustrated about that. However, it's looking good, I think, for further downside at some point. I mean, we've had this huge move up. We've retested all this area here. So the next question is, well, are we going to retest up to this level again? Are we going to go above this wick, or are we just going to proceed and get on with the dumping down into the 4300s, which I think we're quite liable to get. There were some pretty horrible put-call ratio charts on Twitter on the Friday showing that the extreme swing into puts, and I guess we've come into this sort of level here, this sort of pivot level, this old high above this distribution. Maybe here will become accumulation, So So it wasn't great to see such an extreme reading like that, but the look, again, it looks shit, assume it's shit. And we'll add more to that by looking at our breadth charts and our internals in a second. So, yeah, it's been a fun week shorting the S&P, but every penny I made doing that, I lost trying to buy silver. But now I've got half my account, again, my tiny small account, in a long silver position, and I'm holding short some S&P positions. You can see the bouncing at the close, and there was a lot of posting of the typical the bears have been fucked again, you know. But this is nasty looking price action, vicious, up and down, up and down. There's a degree of instability. We've had the back test. We're going down slowly but surely. We found buyers under this wick, but if we lose this, we're coming down. Again, this is minimum target. Minimum, mid 4300s. Practically below 4300. I mean, again, let's just go back on let's do the 12 hour. Let's not quite do the daily. A really deep move. This whole move here looks a bit fragile, doesn't it? And then we've got this heavy topping, back testing, dumping out, shaker, shaker, shaker. So either there's amazing, surprising hidden strength that's going to come in, you know, here. So under these lows, under Friday's lows, sort of 44.80, 44.70, maybe, yeah, 44.90, 44.70, something like that, in that zone. Or we're coming down big, we're coming to 4,300, I think, to get started. The Corona crash lows. Let's make everyone scared. Turbo the printing press. So it would make sense for some of this to be given back, because if it just keeps going up at the rate it is, that would be the most severe, the most incredible asset inflation, which we're starting to see it affect things in the real world. It's not just that stocks are going up because of the funny money and everything else is bobbing along the same as ever. We're starting to see it leak into the real world, it seems. So let's have a look. Bullish percentage of the S&P, made new lows, no bounce. Look shit, assume it's shit. NIAD. Let's actually replace that with the S&P. Yeah. Has come back into these lows here, and the centre, or the lower third of this range here. So there's the argument that it's reset sufficiently. Prices stayed higher. Prices coming into this area here. The NIAD is all the way down here. It's reset more than prices reset. The indicator is reset more than prices reset. So it's off to the races for both now. But again, it looks shit. Assume it is shit. Same for the McClellan Summation Index. Stocks over the 50 had a bounce, but we're still in negative territory. We're still under the halfway mark. So big bounce, but probably could just be a retracement bounce. NIAD plunging. You looked at the NIAD, you thought, well, have we got a small bit of divergence here? Just plunge. Plunge-tastic in the NIAD. So there was the extreme reading we were talking about. I think last time we got the bounce, and we're shaking around in this real low area here. Now, when you're shaking around at such extreme lows, I mean, you can have a move up on this without getting a big corresponding move in price, just a degree of resetting. But if we're staying under the 60%, that's usually when we're looking at bad times. and this goes back to the summer. You can see all the previous corrections came down to 35, 30, 15, 20. This has been a much, much deeper dive. If this isn't a one and done, this could be indicative of trend change. The extreme reading being indicative of a change in overall sentiment, where now, here you were buying the plunges that went deep but not too deep. Maybe this is indicative, this new extreme low is indicative of you've got to flip your perspective, and now it's when the retracements upwards are for shorting, because you know it's going to plunge back down. Taking things at face value, avoiding thinking about them, avoiding thinking too much. Let's be honest. It looks shit, I'm going to assume it is shit. Because it's trying to find buyers at this level, but we've had this move here and dumped pretty ferociously. Now that's a big candle up at the close, but again, what's this? People getting out of positions, just a bit of hedging. Doesn't necessarily mean we're going to continue that away on Sunday night or Monday. This could perfectly well be the retracement that rolls over and comes deeper, which is what I'm going to trade it like that, until I see it turn around on internals and breadth. Or do I have my Trend-O-Matic indicator on here? No, I don't. Where's the one with the Trend-O-Matic? Here we go. Trend-O-Matic is red. So, keeping it simple, keeping it stupid, not applying my limited intelligence too much. It's red, and red is bad. Sell when red. Follow rules. Let rules do the thinking for you, because your thoughts are going to be retarded and filled with hope and fear and greed and emotion. Here's the weekly euro. Rather like silver, move up, across, down. It's moved deeper, I suppose. It's retraced more deeply. We've gone back into this big pivot here, which is a monthly 50% fib at 11225. And we've had a stick grenade followed by a doji. And we've also put in a positive reversal and a positive divergence. Positive reversal on the long-term momentum, and then a positive divergence on the ease of movement between these lows here. Trend-O-Matic is red, but we're at such massive support. Yeah? I'm going to draw in a trend line that connects those ones. Let's thicken this up. Is that not thick enough? Fine, we'll do 3. So it's like a nice mirror image of this one. Let's do a fib of the whole thing. Let's do a fib of the whole triangle. Come on. So of the whole triangle, that's the 61.8 on the weekly. We've hit the big 50 on the monthly. We've put in a positive reversal on momentum and a bullish divergence on ease of movement. Let's do a fib retrace from the local weekly to the local weekly. Yeah, we're in between the 60 and the 70. Let's have a look on the daily. So, hypothesis being here that if the euro is making a significant low and is poised for a significant rally, that also bodes well for silver. On the daily, yep, Trend-O-Matic is red. A breakout, basically, of the flag. If that's going to be a flag, you could have buy stops, I suppose, that's above these wicks. Let's have a look on the lower time frame, on the hourly. Yep, there's sort of the pseudo channel. I know the bottom one isn't too great. And there's your divergence. And to get rid of that, so just put a fast RSI on. Wait a second, what am I going to do? 5 and then 4, 3. Get in there with the fast RSI. The one that hurts your eyes. Instead of turning the music up to 11, let's turn the RSI up to 3. You make any sense of that? You've got a good brain and a good eye. So yeah, basically, we're looking at this area. Come on, where's my box? Where's it gone? Yeah, this area. This area becoming support, and you know, buying. Buying, buying, buying. So, the ugly invert twin of silver and euro, which are anti-dollar, it must be the dollar itself. Let's have a look. What's pleasing here, from a bearish perspective, is this red line here, the way it's acting as a pivot, and the way we're trying to get above it, and then we keep being suppressed. What I don't like is, I mean, you can make there's your bull case, you know. Look at these positive reversals. This is support. We came into this previous demand that came out of this down candle. That's the bullish case, and we're going off the races. The bearish case is breakout, failure, and then resistance. It's not easy. We're getting more resistance. We're sticking. This pivot is sticky, and maybe we're going to fall away and come down from it. Let's look at a lower time frame. And there we are. So you see on the 2 hour, we had the negative reversal. And a negative divergence on ease of movement. Let's put in something like a channel, or a little flaggeroo. There we go. And we have a nice channel on the 2 hour. So on the lower time frame, we have something to substantiate a bearish leaning at these highs. Obviously, in a daily context, the trend-o-matic is green, but the context being big time resistance, basically. This whole congestion, the center point of this congestion here, and look, it's a low, it's a high, it's these wicks, it's the middle of this congestion. This whole fucking business here is a potential resistance zone of, you know, big time. Or not. That's the thing with trading. Or not. So we'll see. We'll see. Let's take a look at Bitcoin. I guess this is the CME version. We've got this big gap. But you could see, if we're putting in these highs here, we were getting this reversal, this negative reversal in the ease of movement, and also on RSI, which would be a lot more pronounced on a faster RSI. And the trend-o-matic is red. Support was becoming resistance, and you were bumping up against these trend lines. So you had a dozen and one reasons to be shorting. If you did, well done, you got paid big time. And now here we are, and frankly, who knows, what a mess. I guess under this wick was the buy, and the people are buying. Let's have a look at the hourly. Will we close the gap? Will we close the gap up to 51,800? I cannot stop yawning. I slept for 11 hours last night. I'm so tired. I've been ill for like 2 weeks now. So, yeah, there's a pivot there. There's a pivot. Let's throw in a different colour. Let's say, what should we say? Let's say this whole gimmick here. I mean, if we made it back to here, that would be, or even before here, if Bitcoin's taking a turn, if it's taking a funny turn, then, you know, you want to start finding places to short, I suppose, before you miss the next down thrust. But, again, it's the fear of missing out that dooms you. I mean, who knows, maybe we're going to 200,000 now. But yeah, that would be a good initial target area for some more shorts, in my humble opinion. Semiconductors, again, I was looking at semis as a reason also to be shorting the S&P. Again, it was looking at the Nasdaq as well that led me to these conclusions, at least in the short term, falling off. The Trend-O-Matic just printed its first red. We're at this chop up and down. Ooh, it looks like distribution a little bit. When that chopping around, you know, at the highs, after a big wedge breakout, is this like a sentiment exhaustion and now we're dumping and we're coming back in at least the trend line of the wedge? 26.5, potentially. Or maybe just, you know, bullish case, we backtest the top at 28.8 and 28.9. Bonds. Ooh, baby. What did I tell you? That's right, I told you. We talked about these lows, how this was a buying area again, because you might think, oh, but it's been exhausted. Look how many it was here, and we got this move. That means it's exhausted. But again, you've got to look at the context here, the divergences, and also the fact that this is a massive fib here. That's a massive weekly fib. And then it was all about this pivot. What happened? Above, gap below, back above, off to the races, and now we filled into this gap here. So, yeah, I feel like I have some good levels in there. I can't remember if I made really a call. I think I was still biased long. I can't really be bothered to go back and check, to be honest. But there we go, something of a gap fill. Where now? Well, who knows. Uranium. It's come back into a good buying area here. We're getting the bullish divergence on the ease of movement. RSI is in the sort of the bull turnaround zone on the daily, where we would expect in a bull market to see it return to before renewed upward motion. We can put let's put a channel on. That's a tight channel. You know, that is a tight channel. So a breakout above that line would be well, these lows is a reason to buy. Now, on the divergence, these lows at support, that's a reason to buy. The channel breakout would be a reason to buy. The Trend-O-Matic is red, irrelevant. Look what uranium is doing. When you're at these kind of key areas where this is the maximum retrace, basically, that it could be, and you're seeing divergences, the Trend-O-Matic does not apply at these key reversal areas. You've got to ignore that and think about buying low. That's when you make the value trade, not the trend trade. So yeah, and even if we only go above these highs, that's 900 points. So that's a lot of breakfast. That's a lot of English breakfasts I'll buy. Crude. Now this is an interesting one. I'm trying to avoid crude in oil trading, but my goodness me, look at this. We came all the way back up to the lofty heights of $85 a barrel. And then we plunged 26 and a bit percent. On the close, 22 and a bit percent. in 1 month. We're doing a back test of this, and also these lines on the weekly. Oops. Which come from way back when. And also these horizontal support levels here. They're not quite horizontal. Oh no, they are horizontals. They look angled on my screen. Big the horizontals. So we're in a confluence support. We overshot the resistance. A lot of excitement, and then kablamo. Bear market, a 1 month bear market. That's why oil is so brutal, isn't it, to be fair? A bear market in 1 month. So the question is, are these old resistances turn supports going to act as supports again? And we've seen this pull back here, this pull up from these lows. This requires further investigation. In the big scheme of things, that's a high oil price. In the big scheme of things. Yeah, look at that. No wonder people getting excited. I'm going to thicken that up. I'm going to make that thick as fuck. So in the big scheme of things, that's a high oil price. Inflation or not. If we break up out of this, then one can only imagine that would, to me, signal a degree of death of the dollar that is hard to even fathom. Oil at $9 a barrel. Look at this. Even in 1999, $10 a barrel oil. I mean, good grief. Anyone who wasn't buying, anyone who was not double fisting this market. But again, it was like, where would you put your stop? You're buying at like insane prices at anything under 25, but you've got to weather it down to $7.50 a barrel. Oh boy, oh boy. And this is like the amalgamated, this isn't the futures that went negative, this was like the rolling prices. Created by the spread bet company, I think. Yeah, and again there's that whole support gimmick that really we ought to hold. Yeah, and look, it's coming in around the same levels. But there's certainly room to go lower, and if stocks are going to go lower, why not oil? Do we have anything left to look at? GBP, JPY. Yeah, I mean, it doesn't look good. The fact we backtested the underside wick here and then came down again. We've had so many taps on this. This does look like an exhausted level, and I can't see like useful divergences. I mean, never say never, but it doesn't look like the best buying opportunity. It could be because you're at a low. You're at a low that goes back to the start of the year. So on paper it is, but yeah, I don't know. I wouldn't be too ambitious if I was. Because on paper it's good, but again. Gold! Again! With the scaring us shitless. Trend-O-Matic has flipped red, a little bit late. On the daily. And it's this whole channel gimmick that is a mess. I mean, I don't know if this follows any kind of proper technical rules. But yeah, we've come back into the point of origin of this move. We've just dipped under and deviated this horizontal support zone that goes back a long way, and we've hit a big daily line as well. Yeah. Let's swap out the indicators. I've not updated it for this. Yakaroo. It's all very ugly, isn't it? Time series. I don't even know what these things mean. Keep it simple. Well, that's not a fat load of use, is it? Let's zoom right in. There we go. Yep, bit of divergence. Hooray! So points of origin, support, deviation, scare everybody. Hopefully this is going to turn around now. Oh, we've done it like this, have we? Oh, I'm not sure about this. Right, let's. It's better just to have a faster RSI, I think, rather than the composite RSI. Well, that's what I'm doing to my charts anyway. I'm swapping out the composite RSI index for the just for a fast RSI. And just like silver, again we had the low, except the low in silver was the plunge here at that time, and then breaking through these lines, these horizontal levels, and closing perched up, either perched on a precipice or perched on a launch pad. We'll see. Nothing too much more to say about that. The FTSE, look at it, what a disaster. Pound dollar. You got to admit that looks ugly. It does look. It's not looking great. I don't have anything to say about that really. Anything else worth talking about with silver other than my hopes for silver? Yep, let's have a look. Silver against stocks. We're bobbing along at lows. Slight improvement. Silver against gold, bobbing along at the lows. Looks crap, but slight improvement. Silver against bonds, new lows, extra crap. Silver against other commodities. Not a whole lot to say. Not a whole lot of value in looking at those this week, I don't think. And that's a wrap.